Awesome. All right. Hello, everyone, and welcome to the Traders and PJs family. My name is Curtis, and today we're going to talk about, why I quit my job that was paying me pretty much $150,000 a year. After kind of learning this lesson, but really about making money. I knew this lesson since I went to business school, but I didn't really internalize this lesson until pretty recently, which is kind of sad. I wish I did, and I wish I was investing the way I am much earlier. And I'm going to show proofs of results so far. Maybe not. I'll show my long-term proof, and then I'll have weekly videos that show my progress for my short-term trading as well as my long-term trading. But you can watch the other videos for the short-term proof. So today is June 10th, Wednesday. As always, feel free to ask any questions you have during the lesson, keeping in mind the GFAST mentality, which is explained in lesson 1 of the from Clueless Beginner to Profitable Trader series. The chat is saved, so I'll read your question and answer it whenever I get a chance. So the table of contents for today, as always, we're going to start off with the 5 ways to support the channel if you're interested. Number 2 is why time equals money is a bad way of thinking. And then talk about the 8 different income streams that exist, 8 different kinds of income streams that exist in the world. And then talk about the dividend income, and then talk about short-term capital gains, which is my stocks and options trading, which is short-term trading. So long-term trading is dividend income, short-term trading is stocks and options trading. So as always, the 5 ways to support the channel. Please like, comment, and subscribe if you find this content valuable and you also want to follow along with my trading journey. That's completely free. Number 2, please share this with others. I make these videos really to teach my friends, so I don't have to teach them one by one. But if you find that your friends would find this content useful, please share it with them as well. Number 3, Amazon affiliate links. You can click the link in the description below. You don't have to buy the product that it links you to. As long as you click the link and then buy something on Amazon, the channel is supported by that, and there's no change to the price at all. Number 4 is referral links for Webull and Robinhood, and also in the description, as well as a donation and tips link in the description. Never required, but always appreciated. Remember that everything said on my video is just my opinion based on my experience trading so far, and is for educational purposes only. Trading is very risky. Nothing I say is advice or recommendation. Please read the description and trade at your own risk. And as I always say, I'm not a guru. I'm really just teaching based on my experience and what I find works for me. So number 2, time is money. Time equals money is a bad way of thinking. Most people, obviously, and all around the world, make money based on trading their time. That's just how the world works for most people. As you move up and up, higher into making money, the owners of businesses, they generally aren't paid on an hourly basis. Now, some people in the audience may say, well, I earn a salary, right? I get paid $40,000 a year, or like I did, basically $150,000 a year. I'm not getting paid for my time, so that's fine, right? Not really. I worked, when I first got out of college, I worked in investment banking, and then I worked into private equity, which boosted it up to $150,000. But yes, I made a lot of money. $100,000 is a lot of money, but I was working maybe 80, 90 hours a week, sometimes 100 hours a week. And if you break that down on an hourly basis, I was getting paid basically the same as someone making $40,000 a week. And your hourly rate is pretty easily calculated. Just there's about 2,000 working hours in a year. And so if you just divide your salary by 2,000, then if you make $40,000 and you work 40 hours a week, your hourly rate is 40,000 divided by 20,000. Why am I so bad at math right now? Divided by 2,000. $20 an hour. So I got paid $100,000 an hour right out of college, which is, you would say, oh, that's $50 an hour. But I was working basically 100 hours a week. So I was basically doing 2.5 times that, so 100,000 divided by 2.5 times, which is 5,000 hours. 2,000 times 2.5. Whoops, that's not right. It's $20, the same as $40,000, right? And so even though I wasn't technically getting paid on an hourly basis, my time basically, when you convert it to an hourly basis based on the hours I was working, I was getting paid $20 an hour. That's not a bad salary. That's not a bad hourly wage whatsoever. But it's still being paid for your time, right? Now, how do you get away from this? Basically, you have to switch on from focusing on how I could make passive or earned income like a business owner or a stock investor instead of active income, which is working for trading your time for money, which is what the definition of active income is. And we'll talk about this more on the next slide when we talk about the 8 different income streams that exist. So, but this is kind of why I quit my job. I quit my job to start focusing, not originally, funny enough, but that's a story for another time, to do dividend income, which is long-term investing, and I'll show my results of my long-term investing so far. And then also residual income, such as making a YouTube channel, which I thought I really enjoyed doing. So I also started doing that as well. And earned income, which is, trading stocks, actively trading. I'm a full-time trader now. And another way of earning income is creating a business. And I'm actually working with my friends on a startup idea that, I'll talk more about as it becomes more solidified. It's still too early right now to share. And some people might consider it a bad choice for me to quit my job. I was making, as the title says, $150,000 a year. But remember, I was probably making like $30 an hour, something like that. And as well, as great as money is, my values, I just valued my time more than just making money. And I figured that, I was very confident in my ability to figure out how to make enough money to live comfortably. My standard of living and my cost of living is extremely low. I'm not one to buy fancy stuff or just enjoy the luxurious things when I can't afford it. I like to live below my means. And so, the money that I made on my job wasn't enough to offset me enjoying my life while I'm still young and able to do things, right? And so that's why I decided to quit my job. If I wanted to be greedy, I probably could have stayed at my job and then, made 7 figures in 10, 15 years. But it's not worth the trade-off in terms of the amount of commitment time-wise and energy-wise and focus-wise that would have to go into becoming a partner at my private equity firm than just, being able to enjoy time with my family and friends. People don't live forever, and so you never know when you might lose someone, and so that's why I decided to quit my job. Now, one of the very powerful things that everyone in finance understands, and most people, as long as they have some knowledge of math, understand the power of compound interest, but they don't really internalize it. Even my friends who are engineers, they obviously know what compound interest is. Even myself, I went to 4 years of college, and I still didn't really internalize this concept and start investing seriously until this year. So one thing I make for all my viewers is a master file, which you can download in the description below, but I'm going to pull it up right now. And Warren Buffett even talks about this during the 2020 Berkshire Hathaway annual shareholders meeting. If you want to go find it, you can Google, YouTube that, or you can just go to my channel and go to the influential investing videos playlist on my channel. It's one of the videos there. And so let me pull up Traders and PJs, files, master file. And so I created this thing. You can download it. It has a bunch of tools in it: risk management tool, options trading tool, trading history tool, GICS, which is the global industry classification standard, to show you all the industries that exist in the world. But we're going to focus on the power of compound interest today. And so let's see here. Let's walk through this really quick. And this is pretty straightforward. What I did here is, this is just one investment at today. So let's say you throw $1,000 today into this account. Then in 45 years, if you're 25, in 40 years, you'll have 14 times that amount of money that you invested today. Now, that may not sound like a lot, from going from 1,000 to 14,000, or actually 15,000, because it's 14.97. If you round up, it's about 15 times. But this is relative. So if you invested 100,000 today, or 10,000 today, you would have 15 times that amount in 40 years. And this is why the most important thing in investing is starting young. The more time that you have, the more powerful, the more time your money has time to grow, right? And that's the most important concept. And that's the power of compound interest. If you want to download this and check the math, you can go ahead. But I assumed a 7% growth rate, which is kind of the average S&P 500 after inflation growth rate. And if you invest 100,000, then you would have 1.5 million. If you invested 10,000, then you would have $150,000 at your retirement age of 65. Now, this is all great, but this is not realistic, right? Most people don't just invest one time. And well, the sad thing is a lot of people don't even save at all or invest at all. Saving is not enough, right? You actually have to invest your money so that it can grow. The savings rate right now for your bank account is like less than 1%. So just not great. If you're young, you're able to take the risk. You should be investing in the stock market and allowing your money to grow. And if you're not young, that's completely fine. You just have a different weighted average between safe investments and high growth investments, which are usually riskier. Now let's do a very simple, another example where you actually invest, let's say $6,000 a year, right? And this is monthly deposit of $500 a month. And I think anyone in the audience, even if you're working, at a, probably not a minimum wage job. It really depends on your lifestyle, but hopefully you're able to save at least $500 a year, a month into your retirement and be preparing for the future. So if you put $500 a month, you save about $6,000 a year, and we grow that at 7% each year. And you can check the math on this. It's a little bit more complicated of a calculation, but if you invest $6,000 a year, then you total after 40 years, you will invest $246,000. Just purely without any growth of your money, $246,000. But the growth of that money right here, which subtracts the $6,000, but only talks about how much this money will grow to in 40 years, you'll make $1 million, right? And so in 40 years, your $246,000 actually becomes 1.3 million. So that's the power of compound interest. As long as you're able to save $500 a month starting at 25 years old, and if you start even younger, that's even better, right? The more time, the better. And you just do that every month until you're 65, you will have $1.3 million for your retirement. And this is actually probably an understatement, because most people, as they get older, they make more money. And so, my recommendation to all my friends who are really young is live below your means. I wish I did this when I was younger, and I'm not even that old, but I wish I did this right out of college. And just put away 50% of your paycheck every 2 weeks or every month in paying yourself first. And that's really what this means, right? You invest for the future, your future self, and you pay yourself first. And so as you get older, you're able to put more money than just $500 a month into your savings or into your investment account. And that means you would have hopefully more than 1.3 million. But I would say probably most people can live very comfortably on 1.3 million, because generally if you put this into a dividend investment businesses like an ETF, go watch lesson 3 of my from Clueless Beginner to Profitable Trader series. You can invest in a thing called an ETF, and it would pay you about 4% a year on your investment. And so if you had 1.3 million at retirement, you don't even actually have to take any money out of this pie that you have saved. Instead, you can just invest it into a dividend ETF, and it would pay you 4% a year every year. And so you would make $50,000. And I would say most people in retirement can live very, very comfortably on $50,000 a year, I would assume, you wouldn't have to do anything. By owning stock, you own a piece of a public company, and they're paying you because you're a partial owner in the business. And so you don't have to do a thing. You can happily retire, go play golf every day, and make $50,000 a year. But the key issue is that you must be saving now and building this portfolio so that it can pay you dividends each year when you don't even do anything. And this is the power of compound interest, and this is the power of passive income, right? And so this is the goal for me, at least personally, is to become a millionaire and just live off my dividends eventually. So there are 8 different income streams that exist in the world. The first one, as we mentioned earlier, is called an earned income. Oh, wait, shoot. It's not earned then. Let's just say profit income. And so the earned income is an active job from working at trading your time for money. The next one is dividend income, which I talked a little bit about just now. Capital gains, which is from trading, hoping you're buying a stock and hoping that it increases in value, which is what I do as a full-time trader. Residual income, which is getting paid for the work that you have done. One of the things is building an audience and building a relationship with the community and my friends, and making these YouTube videos to provide value, hoping to get some value in return, but obviously not expecting it at all. And then there's referral and affiliate links. That's also part of the kind of community building residual income idea. Profit income, which is from buying and selling. You can technically argue that this is, also full-time trader mentality, which is buying and selling. I say capital gains because capital gains is specific to assets like stocks and real estate and stuff. And then profit income, starting a business, which I'm trying to do as well. You're not being paid for your time, but you're being paid for creating a valuable product for businesses or people to buy, which includes merchandise, apparel, and even sponsorships. Number 6 is interest income, which is from lending your money to others, which you can actually do as a day-to-day person. You just have to Google it. Number 7 is rental income, which I'm sure most people pay rent, but the idea would be to own properties so that you can collect rent. I'm not a big fan of real estate investing. Personally, I don't like physical assets so much as ownership aspects, like equity assets, like stocks. But to each their own. I know a lot of people that make great money investing in real estate. Number 8 is royalty income, which is income from others using your ideas, such as a songwriter or a singer, which obviously I do not do. But these are the 8 main different income streams, and it's good to know them all, and so you can think about ways to build more ways of making money. A lot of people spend money everywhere and in several places, but they only have one income stream, which is their earned income, which is really the worst way to make money, in my opinion. And so they say the average millionaire has 7 different income streams. So you should consider diversifying your income streams and making money in more than just one way. So let's talk about dividend income. I mentioned the 4% compounded interest, which is my target for the ETF that I invest in. Go watch Lesson 3 from Clueless Beginner to Profitable Stock Trader series on my YouTube channel. I talk a lot more in depth on this idea, and I'll put that in the end screen. Because of this is my long-term portfolio, I really don't care about what the value of the investments are from day to day. The main thing that I focus on is dividend investments. And it's nice that it grows, and I actually do 50% in growth and 50% in dividend investments, ETFs. But my main focus is down here, which is every month I have 50% of these accounts in dividend investments, and I make about 0.5% on that. So let's go with 1,000, right? So I started with $2,000 total in my M1 Finance portfolio. 2,000 divided by 2, right? So 1,000 is invested in dividend income, and I make about 0.5% right now every month, and so that's not right. 1,000 times 0.005, 0.5%. So I make $5 a month, and so you can see that I started investing in this in March, and I've been paid 3 times so far, and so I've made about $15 since starting investing in this business or in this portfolio, and because of the growth of the stocks I invested in, it's actually up 17% total, which is great. It's just a nice bonus for me. But since I'm so young, I really don't care about the day-to-day value of my long-term investments. I really only care about the dividends primarily, and then eventually I care about the growth rate to see how the portfolio is doing so that I can hopefully make more dividends. And this one I actually started, this is my JP Morgan account, You Invest, and I have 2,000 invested in here in growth and 2,000 in dividend. And so I made $10, and I started this in May, so it's only paid me once. But so far in my long-term portfolios, I've been paid $25, starting in investing in March. Now, the next thing is I also became a full-time trader just because I really enjoy it, and so you can actually take a look at episode 6 of my $1 million trading goal challenge, which is a different series on my YouTube channel. I talk about how I made $13,000 in 2 months, but spoiler alert, for my recent progress, I have not been doing well at all. I've actually lost a ton of money. So I readjusted my trading strategy, and I'm confident that I'll recover soon. But if you want to follow my recent progress, you can start from episode 6 or even episode 1 if you want, and go to my most recent episode, which will be this Friday. Awesome. So that's all for today. It looks like there may be 1 viewer, so I'm going to stay on for a minute to see if you have any questions. Otherwise, I am going to hop off. Hopefully you learned something valuable from this, and please consider leaving a like and subscribing to the channel and turning on your post notification so you know when I go live in the future. I like to go live because then I can answer people's questions right away, and hopefully answer those people's questions who are watching live, we'll answer others' questions that aren't watching live. So let me know if you have any questions. As always, ask me a question anytime. Hope that all my new viewers will consider subscribing and learning the free education content that I have. And follow me on my trading journey as well. And something I like to say, which is, may volatility be ever in your favor in your trading journey. All right, I'll stay on for another 60 seconds. Ugh. Really need to work on my sitting posture when I'm streaming. Awesome. Looks like there are no questions. So that's it for today. Thank you guys so much for watching, and best of luck trading.